And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Wednesday, January the 19th. I'm John. Thanks for trusting me with your time. If you're in the markets already, hopefully things are going your way. As always, we're hoping for your success and working towards it on every day. This morning, the housing starts numbers came out. Actually, pretty good. Looking at them now. Yeah, some pretty good numbers. A little bit of a alteration to one of the previous numbers, but in large, it looks like the housing the market is doing very well. How are our markets doing? Well, bond yields last night hit the highest level in 2 years as inflation rises faster and is proving more difficult to control. Wage inflation also now cutting into corporate profits, and we're starting to see that in the earnings numbers. U.S. stock indices are kind of trying to recover today. A lot of folks calling it a dead cat bounce. We're going to have to wait to find out if that is true. Set to open higher in early trade here. We're going to see very shortly in the charts. Crude prices remain strong after some sort of mystery blast hits an Iraqi-Turkish pipeline that goes to the Mediterranean. Reports that the pipeline is operating. API, we thought it was going to be yesterday. It is today, and EIA tomorrow. So we're going to have to wait for more inventory information tonight and tomorrow because of the holiday on Monday. Tensions with Russia continue as the U.S. Secretary of State Blinken is to meet with his Russian counterpart later this week. Now, when you're in a negotiation and you're eyeball to eyeball with somebody you're negotiating, it was told to me that the first one that blinks loses, and it doesn't seem very good that we've got a guy named Blinken going over to negotiate with that kind of stuff. So we will, of course, hope and pray for the best for everybody and everything here. VIX down about 4% this morning off its close from yesterday. A dollar index off just a little bit, 95.52, and the 10-year yield off just a little bit off of the settlement yesterday. Took a pretty good look higher earlier last night or earlier this morning, 1.86%. As always, make sure you hit the lucky like button, share, question, comment, feedback, heckling, and subscribe to our YouTube channel. You get notifications when we do go live. And as always, got to check in with everybody. My brother Rick is the first one in the room today, but unfortunately, employees and family members of employees are not eligible to win the prize. Just kidding, Rick. I love you. Devante, good to see you. Devante missed out on a long after that support in the Nasdaq. Island Sim Racing. Good morning, everyone. Kevin Shaw. Good morning, gang. Good. I'm glad you enjoyed the conversation on gaps in the coach's playbook yesterday, of course. Gaps are a big part in my strategy and in Dan Mix and Jack's strategies, and something we always are going to be looking for and trying to take advantage of. Rob T, good morning. Brian, Chris, good morning. Lacey is running around here because people are walking past the house. There's a school next to the house, and people walk their dogs as they walk their kids to school. So she's got a little pant going on. We did have another encounter, however, with a coyote this morning. So we got a little bit of a habit forming maybe in that with that coyote. So I'm gonna be working on trying to figure out how to handle that. We're probably just gonna have to go out in the yard with her so that maybe that'll be enough to scare the coyote off. It's a little one. It looks like it's about 35 pounds. Pretty. Doesn't look menacing, but one never knows, right? Charles, it looks like we hit the 5% pullback from the highs in the ES. Yes, we have. I have not put those levels on my charts, on my daily charts yet. I'm probably going to do that today because whenever I do that, it seems to put in a bottom and we continue the move to the upside. Good morning, Theo. Robert Kennedy, good morning. Before I turned in for the night, I drew a gap lines on the NQ from October 15th to 16th of 21. The Nasdaq turned around right in the middle of the gap. Pretty neat how they acted as support. It's the way markets work. They are extremely visual, even if we don't know that we're seeing these things. Traders tend to see these things and trade to them and use them as support and resistance levels. I'm glad that you kind of looked that up and found it hopefully an interesting opportunity for you. Lacey's crazy running around here. At least she's quiet. Good morning, Phil. Brody, morning, mate. Terry, good morning. Andres, Island Investing. Good luck today, everyone. Hope it's an easier day than yesterday. Well, we always hope for that, but we are just trying to enter the markets environment and find our little bites on the way out of it. I got a text from my brother. He's probably complaining that he's not going to be able to win the prize. We'll have to see that later. Trading research, good morning. I am not a doctor. I never even played one on TV. Mirek, good morning. George, Angelina, Frederico. Angelina finally popped restart yesterday. Well, you got a fresh slate. Follow the process. A good morning, Sarah. Always a nice sunshine there. Sunrise. Eric, good morning. Dead letter opener. Island Investing. Jacori, Jim, Angelina, John, Three Lions, Insight, good morning, Jay, dead letter opener, yeah, could be a sign. Juan, good morning. What page do you see for economics news? I use investing.com. Investing.com. Pretty decent site. They're pretty quick with the numbers when they come out, most of the time. Jay, hey, thanks for the like, appreciate that. Jay, Jerry is awake. I hope I'm up too. Jerry is up late. Equanimous, good morning from tropical Lombard. Yeah, it's a chilly one out there this morning. You're not too far from me. Lincoln Strait, Equanimous Trading. There's a dead coyote. Oh, man. We don't want that. We just want everybody to be safe and living their life. A wild animal, even small, can be strong. Oh, yes, they can. Yep, absolutely. Dr. VJ, we get notifications on our phones all the time of people's pets who were attacked by coyotes, and we got to do our best to keep them apart. We protect them both. Manuel Caesar, Vince, good morning, Ryan, and Juan. All right, so S&Ps, Nasdaq, Crude. What's going to happen in these markets today? Of course, we never really know. We can just take a look and make our hypotheses and trade to those hypotheses. So we're going to start, as usual, with the daily in the S&Ps so that we can see the open in crude oil, which might be an interesting one today. So let's go ahead and jump in. I'm going to put the charts on. And we'll take a look here. So volume and open interest are always important in my estimation of what markets are attempting to do. Yesterday we broke out in a continuation type of pattern to the downside in the S&Ps. The weekly kickoff low was 46.02. We did close below it. We closed at 45.71.21. A decent volume. I'm not thinking that the volume on this move to the downside is all that impressive. However, we did add 14,000 in open interest. So it seems as though we've got new money below this important level coming into the sell side. Is that new money going to be longer, stronger money, or is it going to be weak money? The only time is really going to be able to tell. We've got the 100 session moving average. You can see it right here. Was supportive yesterday. We've had a hard time holding below it overnight. And we have reached the 5% pullback off the high. We can certainly, stand more than that, but I don't want that to happen. We are, sensing new sellers yesterday. We've got a couple of swing lows to kind of deal with as potential support if we do continue this move to the downside. The first one here, 45.20. The next one down, 44.86. Before we really open this market up to space. Take a look at the 30-minute chart. One second. So we've got so our continuation. Here's the gap fill that we accomplished pretty much yesterday. We've got settlement right at last week's low. Always very visual, these markets. We've got overnight inventory that got a little too short. It's already reconciled. Are we getting a little bit too long? But we're still in range and in value. So I'm going to try and suggest staying patient. Weekly kickoff level could be an interesting spot for us. It's relatively close to yesterday's high. When we opened yesterday and we broke below that weekly kickoff level, that's where our sellers came in. We did get a pretty decent pullback off the low yesterday. We see that. Here's an opening, a break, and then another pullback. We see that kind of comes in streaks and in patterns here. This one not necessarily that great. We did end up coming off and settling in the lower half of the range from yesterday and inside value. So again, trying to determine where's the good trade location going to be today. A longer time frame, I'm looking at weekly kickoff high. We got a Rob Kennedy kind of pointing out that there's perhaps a inverse head and shoulders that we may actually be kind of breaking out now. We could call this the neckline. If we are breaking out of this, the measured move is from the top of the head to the headline. It would put us up in some pretty good continuation areas. We've got a huge gap from Monday to Tuesday. The gap is not that great here from Friday's low to yesterday's high. As a matter of fact, there is none. Yes, for Monday's activity was so small and so little, it's almost as though it never really happened. So if we do have the inverse head and shoulders here, and we are breaking out of it, we may just run right through this weekly kickoff level and continue 2 points higher. We never really know. This would be a pretty decent reversal pattern if indeed it does play out for us. Let's go take a look now into crude. All right, so we've got upside structure remains, of course, very strong. We've now taken out the high of the weekly kickoff level here, weekly kickoff high 84.80. Lots of space up above. We're at basically 8-year highs here. Open interest continues to pile in. We added another 14,000 in open interest yesterday. We had some pretty decent. We're still somewhat in rollover, but I'm looking at the volume and the open interest as a little bit more important than just rollover. It's going to the February contract is going to expire on Thursday. We won't have to worry about rollover for a couple 3 weeks after that. Is a move back to the weekly kickoff level going to be supportive is my main question, because we are continuing basically one-time framing activity as we continue this move to the upside. Volume remains good. Open interest remains good. Everything is indicating that this auction is good to the upside. Doesn't mean we can't be in the what am I looking for here? It doesn't mean we may not be in for a pullback. Maybe a bull flag, another bull flag, 1 day bull flag. Who knows? I'm going to watch, see what happens here with the opening range here. If we do have an opening range, we do have some overnight inventory to the long side. We are opening with a gap. If we can't close the gap relatively early, what's that tell us? That the auction is probably going to continue to the upside. So we look for opportunities to buy the market on weaknesses. Gap rules, yes, we have gap rules. 80 is kind of looking for an opportunity back near weekly kickoff low for a chance to look for a long. Doesn't look like we are going to get there. Do we have an opening range trade? Here's the opening range. We're still inside of it. It is a 20 tick opening range. That's a pretty substantial opening range, and we haven't traded outside either side of it yet. So just going to stay patient, watch and see what happens. If we take out the high, we go long. We take out the low, we go short. If 20 ticks is too much risk for you, and that's okay. Sometimes you'll get a breakout of the opening range. It'll come back inside of it and then go. So you'll be patient, look for that opportunity. Just going to watch this here for just a minute, because I'm going to see if we do get some sort of indication as to whether buyers or sellers are kind of going to be in a little bit of control here. Here's that first minute. High, low. Take a look back to 30, see what we're looking at here. We're still holding some longs. We're going to get our attempt to close the gap and the opportunity to look for cheaper longs here. We may. Right back to low. Now remember, this opening range trade is something that happens sometimes with great frequency, and then it won't happen for a while. And I think we know why. A lot of traders look at it. If it happens consistently, a lot of traders jump into it. The more traders that jump into the opening range trade, the less likely it is to play out. We've been in this range for 4 minutes. It's getting to be a little boring. Let's move on, take a look at the Nasdaq, and then we'll come back and see if there's any information coming from crude oil in the opening range regard. Lower highs, lower lows. A little different than the S&Ps. Take a look at the daily, the continuation chart here. This is the 100 session. This is the 200 session moving average. Last time we were below that, COVID. So we're at an important inflection level down here at this 200 session moving average. Back to the 10-minute chart. Volume yesterday on this move to the downside, I would not say it was tremendous. I wouldn't say that was great. We did not take out the previous week's high yesterday. We did on the overnight. We're rejecting it for now. I don't think that we have any overnight. Looking a little bit like a dead cat bounce here, but take a look at the 30-minute chart. Settlement is down here for 15,206 even. Put that on your charts. So last week's low here, took a look below it, rejected. We are in range and in value in the Nasdaq this morning. It tells me that I might want to stay a little bit patient. When the market got a little too short here, we unraveled those. We took a look at weekly kickoff high. We have 1, 2, 3, 4, 5, 6, 7 attempts prior to the open to break out above the weekly kickoff high. The eighth, I'm Henry the eighth, the eighth one actually succeeds and gets above weekly kickoff high. Is this going to become supportive? I don't think it really is that important for us to be involved very early today, as we are in range, we are in value, and we are at the point of control from the profile yesterday. What is the point of control? The point of control is in volume profile, the price, the single price that has the highest volume for the day. It's the fairest price. It's the most revisited. It's the most traded. Probably not the best place for us to trade. I like to trade where the market does not want to sit for a long time. So stay patient. Maybe we get an opportunity weekly kickoff level. You're going to probably be looking for opportunities when the market opens in range and in value. Sometimes I'll just wait for the first hour to establish itself and then work those extremes. Was yesterday a double distribution day? Equanimous, yeah, it is a tiki tool. If you go to free indicators on TS Trader and apply it to your 1 minute chart, it'll show you that first minute of trade. Nasdaq, a double distribution day. Here's the profile. Oh, here's the profile. Nope. Normal variation day. Here's the market profile. Normal variation day. No double distribution trend day. Really, the market was just looking to accept value down here. Even though the market rotated lower all day, it did not present itself as a trend day. Huh. A dead letter. Herman's Hermits. Yep. Huh. When they dropped that track, when I engineered their tour, I'd take a shot. Hey, there you go. What a goofy song, but you got to respect Herman's Hermits. They did a lot of great songs. Some of them actually written by Carole King, one of the greatest songwriters. Let's take a look at gold now. All right. I think Carole King wrote "I'm Into Something Good," which was made famous and was made a hit by Herman's Hermits. Let's see if we can't find something good here in crude oil, gold. Big volume yesterday on that attempt to break out below that burgeoning bull flag. We've broken out above the bull flag now. Potential breakout above. We added 9,400 yesterday in open interest on some pretty good volume. The volume was basically to the downside. I'm thinking the open interest was more as we pulled away from that lower level. Take a look at the 30-minute chart here. If we can maintain this breakout to the upside, it's a cinch that the market could come up and test weekly kickoff high, which is 1828. When you look at this trend line here, we're looking at 4 points of contact now. We put this in yesterday. We had 2 points of contact. We had this one. We had this one. We created this one. And now we've created this one from the other direction. Opening range trade worked very well today for crude oil, although it was a large opening range. The low of the opening range, which has never been revisited, was 1819.70. So if you took the opening range trade, I think it was probably about 20 ticks, which makes it about 1821.70 is the high of it. You're still looking at a pretty decent 2-to-1, perhaps 3-to-1 opportunity at the current high or at current levels. So opening range offers an early opportunity in gold. We don't know what's going to happen with the breakout of the bull flag. I would look for some momentum to continue this market higher. We'll see if that has to happen. Rick, I don't even know if I have silver on here still. I don't think I do. I think I took it off. We'll have to start looking at that again. I don't want to get into too many products because it's a lot of research doing this now, but we'll check that out. Let's take a quick look at it here. I think we're in Feb. Nope. Nope. So Elon Musk bought 460 million in silver last night. Here's the 30-minute chart. Let's put it on the daily, see what it looks like. Well, yeah, it certainly looks like it's heading to the upside here. Good thing you own some. Euro volume pretty high yesterday on this pushback. We had a breakout to the upside. The breakout to the upside has officially failed, if we didn't recognize that before. We've got volume high and an open interest increase in rejection of higher pricing. New sellers coming in, bringing price right back into value, right back into the center of the area of value that we've been in. Last week's low probably looking like a good spot for a weekly kickoff level, which is just about where the last one was as we continued in this balanced area. Get an opportunity to look back up to weekly kickoff high that may end up being a resistance level. At the very least, it'll offer us the opportunity to limit our risk. And here's the 30. We've got some longs from overnight settlement. 133.39, but here we are right in the middle of balance, right in the middle of range. Was a double distribution trend day yesterday. And where did we open? Right in the middle of the single TPOs. When this happens, there's a tendency for the day to stay in repair, which means that we would look for opportunities at the high volume or point of control in the lower distribution for a long, and we would look at a volume, high volume node in the upper distribution or a point of control for a short. The market may just spend the day kind of rotating back and forth, repairing the missing business from yesterday. So if we're going to look at this, we've got weekly kickoff high, pretty much the value high volume node from the upper distribution. We've got point of control down here, which is the high volume node from the lower distribution, which we've pretty much already tested too. 10-year. We've got more continuation to the downside. Volume and open interest increasing into space. We talked about the space. We've got plenty of space down to weekly kickoff low 126. Volume and open interest increasing. We added 72,000, a pretty decent number for the 10-year. We're continuing to one time frame higher. In other words, lower high and lower low on each successive bar. Chance of breaking that today, but we've got a long way to go in order for us to do so. Beware of the contrary move. We've come a long way here in a short period of time. There's going to be some sort of pressure release in the fact that we may become consolidated. We may consolidate at some point. We may have a sharp pullback. I'm still looking for this move to terminate down to 127 as rates continue to increase, as we await the FOMC, which is, like as we all know, likely to increase rates. So we have to keep that in mind. Here's the 30-minute chart. We ended up a little bit short in overnight activity. We've reconciled that. We're back in range below value. If we're going to be looking for opportunities to sell strength, wait until probably that first hour of trade is over now, and look to fade those extremes, or at least trade to those extremes. We've opened out of range and out of value. Acceptance inside of yesterday's value creates an opportunity for us. The value area special situation. When we open outside of range and value and reaccept inside of the previous day's area of value, there's a higher probability of that acceptance creating a move to the other extreme of the value area from the previous day. So it is a subjective thing as to when acceptance occurs. We used to say that you needed 2 30-minute bars to close back inside previous value to mark acceptance of it, but sometimes it goes too quick and you're going to miss it. Sometimes you try and be cute and get into it, and it leaves and comes back and leaves and comes back. It can chop you up a little bit, so be careful of it. But keep your eye on it if you're going to be watching the 10-year and you're not going to be active. If we do spend some time inside value, watch and see what happens by the end of the day. We could see other extreme of value. And even if you're not watching it, there's something to learn in that. Nat gas. Still awaiting instructions. We got an outside, inside, outside day. We've seen some open interest increase. We added 3,000 yesterday. Very low volume, just low motivation yesterday. But there is, if you'll pardon the pun, some energy coming into this market, and the fact that we added open interest on such a narrow day. Rational investor remembers we used to call it the 80% day. It's more like the 65% day, 65% rule, it seems. But that's what we called it on the trading floor. Hey, 80% day, 80% rules in play. Back to the nat gas. So we've got a outside, inside, outside day, increasing open interest. There is change coming, but we really have to wait and see what this market discovers. We got nat gas EIA release tomorrow, and it is in rollover. Monday we're going to be switching into the next month according to volume. Of course, we'll be keeping an eye on that and letting you know when we move. And we will, in the meantime, we'll sit and watch. I don't see that there's anything great to happen here until there's some sort of a change. Yeah, 80% rule has. Yeah, it can sucker you into some trades. So here's the nat gas. Do we have any overnight inventory as where we sit now? No. Are we in the range and value? Yes. Are we going to stay patient? Promise me you're going to stay patient. It's almost like I'm thinking about watching and seeing the extremes of the week before I want to get into anything here. We've got Sunday night high here. We just put in a new low here, but this was our previous low. So right now, my hypothesis that says I want to look for the extremes of the week for opportunities has rung true. Yeah, how cold is it, Fred? Hey, Fred, it's good to see you. All right. So, all right, we got. There's always so much to talk about. I feel like we never have really enough time to get rid of the echo. And but hey, here we are. We got about 9 minutes before the S&P's open. Looking forward to a good trading day for everybody. Rick, I'm gonna kind of add the silver, shore that up for us so we can take a look at it. I know that's a product that you have been and are very interested in, and I'm happy that things are headed your way. Elon has joined your position, so and you got in first. Ha 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 ha! I love that. All right, take our deep breath. Stay humble, grateful, and creative in your trading today. We'll see you for foundations today. We're talking about the traits detrimental to trading success. It's up to you to decide which wolf you feed in your own mind and in your own body. Going to be a good session, and then of course we have group coaching after that. So it's gonna be a busy day. Looking forward to it. Trade well, everyone. I'll see you in the proverbial trading pit in about 4 minutes, and we'll see you for Top Step Trading Foundations at 12:30 and 1:30 for group coaching. We had to slide it back a half an hour. Sorry if you've been trying to get in earlier, but with the foundations, which will be over after the first week in February, at least for now, we've moved group coaching back about a half an hour. So anyways, trade well, have a great trading day, get out there, profit, and I'll see you later.